There's been a lot of focus recently in the news about a recent collaboration between the SEC and the FBI to sort of go after potentially manipulative practices perpetrated by high-frequency traders and algorithmic traders. I have with me Joshua Walsky, the CTO of Broadway Technology. Thank you for being here, Joshua.
Thank you for having me.
And I want to talk to Joshua a little bit about this collaboration and where you see this collaboration and this sort of regulatory push falling in the evolution of electronic trading.
Yeah, when we first read those articles too, we reacted, as I'm sure many people did.
Mm-hmm.
But then we took a step back and started to think about the evolution of electronic trading
Sure.
and how it's impacted the markets. And we saw that early in 2000s, electronic trading became more prevalent, and there was obviously growth, and the growth has been substantial. And now, the majority of equity markets are electronically traded. We see high-frequency firms playing a major role in the markets, and we see regulation now reacting and evolving also just as the markets have. And the SEC, through a variety of things, has made it clear that they are going to participate and going to have a stance and an opinion on the matter. We see that by the activity going after and investigating market practices. We also see it in other things like the creation of the Quantitative Analytics Unit,
Sure.
a group specifically focused on this, as well as things like the SCI.
Right, and the SCI is the Systems Compliance and Integrity Regulation that they've recently sort of proposed, right?
Exactly, which is another move by the SEC in this area where it's clear that as a market participant, I can see that the SEC cares about this.
So, okay, what would you say to, I think a lot of TabbFORUM members and a lot of people who have commented on various news stories that I've seen have said, oh, why is the SEC so slow to come to this? And what does the FBI possibly know? What can they lend to the discussion?
Well, taking a measured approach and approaching something soundly with a lot of information with the goals of producing a better result is generally, in my opinion, preferable. And you can see one of the reasons I think that there has been an increase in the media recently is a lot of the SEC's activities and planning, in 2011 to create the QAU, is now starting to actually act, and we're seeing some of those actions, and that's why there's a renewed interest.
So you're saying that this has been going on for a while, and we're just seeing it in the news now because they've come out with specific actions, but it's like the work behind the scenes has been going on for some time.
Right, and as with anything, as with starting a new business or a new business unit or even a new team within an organization, it takes time for that team to actually produce results.
So, and you feel confident that the SEC has the correct people involved that actually know their stuff, that can do this?
Well, I see the SEC has hired, as you mentioned, a team to do this, a Quantitative Analytics Unit. And I look at the resumes of those people, and I see people who are industry experts, people who have been doing this. And it does seem like the SEC, within its organization, is trying to build its own expertise in this area, as the market has innovated very, very quickly, and we see the SEC now building its own expertise.
When you talk about innovation in high-frequency trading, you're talking about innovating and finding new ways to trade. Okay, so I'm wondering where you would draw the line between innovation and market manipulation.
Ultimately, I would say that the regulatory body, the SEC, is the one who defines that line. Clearly, they're interested in high-frequency trading, and they think there is, either some new definitions that are required there, or they need to determine what fair is and what the rules ought to be. But ultimately, it's the regulatory body who is going to come, and they're responsible for setting what that line is.
So a lot of market participants will probably see this additional regulatory push in a long list of other regulations coming down towards them as something to respond to. Do you see regulation as the driving force that's changing the way the markets operate, or is there something else at play too?
So from our perspective, we're definitely aware of and paying attention to regulation. As I said, it's our role and responsibility to adhere to them, be aware of them, know what they are. But from our perspective, we really look and we see the market pressures have also changed. The economics of electronic trading are different. Mm-hmm. Early in the 2000s, there was really a true first mover advantage, and there were very, very high revenues. And people who did innovate and innovated first, just like every first mover, were able to be incredibly successful.
Sure.
If you look now, fast forward 10, 12 years, you look now and the lion's share of the market is this way.
Sure.
Most trades happen this way. So, 5, 10 years ago, if you did, if you had, let's say, a software system and it did 10 trades a day, maybe it did 100 trades a day, and you had an error in that system that happened once every, let's say, 10 trades. 100 trades a day, happened once a day, maybe it happened once a week. If you have an error now that happens once every 10 trades, you will see that error thousands and thousands of times in a minute. The scale, the risk is so much higher. The margin for error is much smaller, and the demand for correctness is higher. Additionally, the revenues that used to exist as the first mover advantage don't exist anymore. So we see as a vendor, we're very much under the competitive landscape to produce a better product that is more functional, that works better, that allows our customers to do more for actually a much lower cost.
Well, I think we will leave it there. Thank you so much, Joshua, for coming in and talking to us about this. It seems that there are definitely more to pay attention to than just regulation. You have to focus on market pressures as well when you're building your business. And I want to thank Joshua again for being here, and thank you all for watching.
Thanks again for having me.
Thank you.